This emphasis on judgment rather than simply boldly and clinically looking for pattern discovery and trading raises the interesting point as to the effect of the new advances in behavioral finance on people who trade with charts. And one of their fundamental insights is, of course, loss aversion, which is simply that people fear losing money more than they enjoy the thought of gaining money. And that is why the notion of risk control is so important in charts, because it deals with precisely that fear by fixing your loss at the same time as entering your trade. And as soon as possible, adjusting that loss level to the entry level into the market, and therefore making the trade an unlimited upside gain with no possible downside. So it's that particular risk control strategy of establishing the loss level as soon as you enter the trade is a very good way of dealing with risk aversion, which is one of the principal insights of behavioral finance. Traders want to trade every day. How does that fit in with patience and discipline? One way around it historically in dealing rooms was to give them something else to do at the same time, like making a market in something. So they'd deal with customers and make very small turns as they made a market in a particular asset or debt. Another way, but I may say that very often trading rooms were full of very bored people who not only want to trade every day, want to trade every minute. They were full of overtrading, much to the detriment of the shareholders of the bank. As regards the individual trader at home, the answer to it is, there is no answer to it but self-discipline. Waiting for the right opportunities to come along and not trading, maybe listening to CNBC, I don't know. Even when I was market making options, for a long time I had run an option market making team on the Floor of Life and then LTOM and on the and the Commodities Exchange in London. And the job of market making is a very good deterrent to overtrading, because you've got a lot to do all day long, and only when a market actually screamed at you did you actually take a big position. And that was a very good filtering system. Giving yourself something to do apart from trading is very important to successful trading. Mobile trading applications can be very, very dangerous, leading to vastly too much trading, emotional trading, trading off the cuff, trading to impress. All these are disastrous for the P&L. The fact that a market is available round the clock, like the FX market, of course, means that the enforced downtime of the bond trader or the stock trader doesn't apply. All the more the worry about overtrading. I love taking losses. I love the relief from the anxiety of it. I love the possibility of being mentally freed up so that I can look and enter into other more profitable trades. I've always felt that the true cost of running a loss-making position is the loss of missed opportunities elsewhere while you worry and fret about this loss-making opportunity, this loss-making position.